All right, traders, welcome to today's market recap. This is Christian from Tribeca Trade Group, and today is Wednesday, March 8th. So themes of the day, we will get to as soon as I read off the risk disclaimer. Everything that we're going through is for information purposes alone, not giving out any advice or recommendations. Every day I try to say it faster and faster, but please read the full risk disclaimer right here. So yes, themes of the day, of course, the Fed, Powell testifying for the second day in front of Congress. And, really it's, for me anyway, it is really what the market is doing while he comes out with the information about, what they might possibly do come March 22nd. So I will show that first. It's basically what the Fed fund futures are doing and whether or not or what they are pricing in for the next Fed meetings. Why? Because this is important because of, liquidity in the market. The higher the interest rate goes, basically the more liquidity is kind of coming out of the market. Money is going into shorter term bonds because they are something where you can get yield. So I think we all know that at this point, but in any event, just wanted to provide a little bit of background. But right now, this is a pretty crazy move that we've seen, right? This is now basically very close to implying 50 basis points that are coming March 22nd. That is new. How do I know that's new? Is because if you click on this, right, you could basically see how this has been, what this has been implying over the last month. Right. And there you go. Just a few days ago, we were at basically around 31 basis points in March. Right. This is what the March Fed fund futures were implying. And then all of a sudden, boom, yesterday, you have this big jump up to 40 basis points. And that didn't stop. So some people were, there was talk of whether or not he would walk that statement back. Again, I don't think he said anything that alarming or that, that wasn't in the cards in terms of what he said the last time that we heard from him. He basically said that he's going to be data dependent. And we've seen economics that have come out, better than expected, and inflation numbers hotter than expected since, the last Fed meeting. So it is kind of weird to see it adjust so much in the last couple of days. Why didn't it give that picture to us before? I don't know. I don't have that answer, but the market, it's pretty amazing. I would think when something like this happens, equities would be selling off pretty hard, but they're actually hanging in there. It's not great price action. It is not, the breadth has, you could use all different types of adjectives to describe the breadth, but it has really been poor. The breadth stinks, in terms of, names that are going up versus going down. And that's nothing new. We've talked about the McClellan summation index just about every day because that gives us a sense of the trend, right? And we've just have been seeing more names that have been going up versus going down. The other thing, before I get off of interest rates here for a second and get, which again, I don't usually lead off with this in these videos, but this is what's been going on. In terms of what kind of environment that we have right now. We're dealing with changes in terms of this. The other thing to monitor too is now we're looking at 1.1% or 110 basis points when we kind of peak out in terms of rates. So again, let me just adjust this, right? This was pricing in, you go back to where we were in the beginning of February, right? And again, this kind of goes along with what the market's been doing in equities. But this was looking at like around 55 basis points, basically around 55 basis points when we started February, and the trajectory of adjusting to more rate hikes. Now this is up to 1.1%. So again, that's looking at like, all in terms of rate hikes going out to July. So this is not like, another, 1.1% rate hike in July. This is cumulative. When you add up, all those meetings, March, let's just bring this back up. Right, March, May, June, and then July, all of those, we're looking at all in 1.1%. So again, that's the path of what's been going on over the last month. And again, this is just the overnight rate, right? I explain this just about in every one of these videos, but I always see people confuse interest rates, right? So here's what it looks like again, because this gets a lot of talk, right, about what the interest rates are yielding, and of course the yield curve, right? The Fed isn't really involved in that. Whoops, I just brought up the wrong thing. Sorry about that. Give me one more second here. But the Fed is controlling the overnight rate. Everything else goes by the way of supply and demand. Now, of course, the 2-year is going to be more sensitive when you have a Fed, when you're applying another 110 basis points going out to July and the overnight rate. What you're looking at here is the yield is, and I'll see if I can increase the font here so that you could see this on your screen. But we're looking right now, again, this is not future. This is exactly what the 2-year yield right now is in government bonds, which is over 5% and 5.07. Again, 10-year which hit 4%, last week, has basically been staying there. So the longer end of the yield curve hasn't really moved that much, right? And again, that's things like, when you look at, if you're looking at the ETFs, right, that's IEF. It's a 10-year, the 20-year plus is TLT. So again, this is not where the volatility has been. If you look over the last week, right, it's kind of been going sideways. It hasn't been that big of a move, right? If you bring up SHI, which is 1 to 3 years, you could see where, right? So that kind of gives you a picture of where the volatility is coming from in bonds. It's on the short end, right? And one other thing to note too, and then I'll move on, I promise, from bonds. But bonds are a big part of the market, right? And this is the MOVE index, right? So again, people are quoting this a lot. That's why I'm just kind of giving my own interpretation to it, but this is the volatility across the treasury curve, right? So some people kind of compare this a little bit to what the VIX, the VIX obviously is just measures implied volatility in 30-day options in the SPX. This is different. This is not the same. It doesn't measure like 30-day implied volatility in treasuries. In fact, I'll give you the description of this because, again, people are comparing apples to oranges on Twitter. So I try to give you a little bit of an explanation. But this is the yield curve weighted index of normalized implied volatility for 1-month treasury options. So it's 30-day options, but it's the volatility across many of the maturities. All right. So again, you could look at this and you could see, okay, the volatility has moved up, as you would think it is, as we just went over that. We just went through the whole exercise of showing, how the treasuries have moved over the last couple months, but it's not as high as it was in 2022. So it's still kind of like, if you look at this, I would basically say, okay, volatility has moved up, but it's not extreme and it's not at major, worrisome levels. All right, so let's get to equities. All right, but again, the market, the equities are adjusting to this, and they're holding in there. I mean, they're really holding into this sideways pattern. Why do I say sideways again? Because if we look at the weekly chart, right, we've been in the value area. The S&P has been inside its value area for the whole year so far. To start, we opened up inside value. We've got to the higher range a little bit, and here's what SPY looks like. If you prefer SPY, it opened up, inside right at the point of control in January, and it's moved up a little bit from there, but again, very, very sideways. All right. All right. So again, what I try to do with my videos for you guys is just kind of tell you what is happening. Right? I don't speculate on whether or not we're going to break out of value or break down or break up. Right? I've got levels to watch, and we make some decisions based on that. Okay, that's how I do my interpretation of what is going on in the market. What I would say as well is, on Friday, going back to Friday, the price action stopped right at the bottom of value, right? Like right where it needed to kind of keep going and break back and to try to get into this range and try to get into the March value area. It didn't do that. So price is still below the March value area, and it's hanging on to the 200-day moving average, right? I mean, we're right here. So this is getting very directionless. Could we get a bigger, some type of guidance in terms of direction? That remains to be seen. But I mean, we're as flat as a pancake right now. We're definitely not moving. The only thing I would say that would make us more even sideways is if we were inside the value area for the month. So you could actually argue here that even though we're holding on to the 200-day moving average, we're downtrending for the month. Okay. And then of course, what I tend to look at is the 1 hour value area, which is inside value for the, we started up here. We went over that this looked like kind of a abstract inverted head and shoulder, and not inverted, but abstract head and shoulders. We broke this yesterday and we broke into the value area, and we're sitting here now inside value. Note that the bearish 80% rule is in effect unless we get back above 4,004. Right, and bottom of value is 39.52. Right, that would be something to target if you have a short on. I now have a short on too. I've left this on until we get if we get back above 4,004, I will take off that short. But that's for my whole for my trading account, and that balances out some of my longs. All right, let's talk about a couple other things that happened today, and I'll use Qs. Q's held in there, right? So let me back up again, right? So let's do this whole exercise really quickly though, because again, you're going to see sideways on the weekly chart, daily chart. We are hanging on to the bottom of value. So for whatever reason, there is more strength, and I don't have a great reason for it. You can make up your own, but for now, like the Qs are managing technically to be a little bit stronger than the overall market right now, right? And that level to watch, right, is 296.42. We went over this in the morning. The Qs were up 0.5% today. So again, they're really holding in there on a relative basis, and that's 296.42. And we also held, so again, multiple time frame analysis, right? We're holding support on both the daily chart as well as the 1 hour chart. We dipped in there today. You could see this candle, but there's some support here. So buyers are kind of hanging in there and supporting this because look at how well that's held, right? Basically, since we came down and touched yesterday, this 295.75 level is holding again for now. So, how would I play this? If we broke this 295.75, then by chance I would look at a short. But right now, I don't think there's any reason to do that. Of course, you could speculate, but if you're looking for, that 80% rule to trigger for the week, you would need to see a break into that value area 295.75. Right. And if we look at IWM, finally, again, because I think each one of these is showing you a little bit something different. Right. Here's where we are. We're below value. Again, this small caps went from hero to zero very quickly. On Friday, it looked like, hey, really nice candle. We're inside value for the month, something that the other indices weren't doing, I think, at that time. And you had a bearish engulfing candle for the bodies of the candle. And then we're back and we're testing the 50-day moving average again, basically flat for the day, but just hanging on by a thread there to the 50-day moving average. All right, 1 hour chart. Let's just do this really quickly, and then we'll talk about some stocks. We are below value for the month. So again, worse, the S&P kind of in the middle of this analysis. Qs are acting better, and IWM acting weakest right now, the small caps. And again, that kind of goes in line with the breadth. If you want to see what the breadth numbers were for the day, this is WEIB, sorry. You could see again that you had for the Dow, you had 17 decliners, 13 advancers. For the S&P, had more advancers, 288 versus 213 decliners. So that wasn't bad for the S&P today. For the NASDAQ, you had 1373 advancers and 1472. 4-week new lows have been ticking up. I mean, look at that. Really big numbers, it looks like, for the 4-week new lows today. much. So again, that breadth kind of, showing you that that's not a pretty picture. All right, I'll just show the Dow as well. It's not something that I've been actually concentrating on recently, but again, the Dow, since failing to break higher here, has that also got rejected on Monday and has been got rejected at the bottom of value and has been moving down. All right, so the story of the day, I would say in stocks, the big bright spot for the day was the move in semis. I mean, really nice move. They were up 2.6%. I tend to really like when the semis, if you're a regular viewer of my videos, you know that I've talked about the semis quite a bit over the last month. I do like when they outperform. I think it's a better environment. so this is kind of, it's mixed signals right now for the market. I mean, really nice, really bullish to see the semis go up 2.6% today. Now they're in this range right now. This is the SMH ETF. I tend to prefer the XSD ETF. There's not much really difference on the daily chart. On the weekly chart, and if you're asking yourself what the difference is between the XSD and the SMH, the XSD is equally weighted versus the SMH is market cap weighted. But you could see this is above value, right? So when we went over those indices before, everything is inside value. But this is an outperformer, right? It's above value. This is another thing that's pretty shocking. I just put this out on Twitter, but if you look at the performance of SMH versus the Qs, right? And I'll bring up this is going back to when these ETFs started, because I think SMH was a newer ETF that didn't start till I guess 2012. The history you could look at the underlying indices, but for the ETFs, this is the all-time high of SMH versus the Qs, right? Or very close to it. So here's the 1-year chart in this relationship. Right, again, it shows pretty nice strength there in the semis. They're very close to breaking out on a relative basis over the Qs. Again, kind of surprising, right? To look at that relationship. Again, I stress again, relationship chart. A lot of technical guys like to put one chart over the other to see relative strength. That's fine to do that, but just keep in mind, in order to take advantage of that relationship, you have to be long one and short the other. Okay. So in any event, I'll move on from there. But if you go one by one through these charts, I thought that a couple ones like an ON Semiconductor were very strong. This is a name that got hit, remember, on that Tesla Analyst Day. Big move today, right? So it's one name that I was watching coming into today. I didn't trade this one. I've got a couple semis on, but this went right up to this virgin point of control. This is something that I pointed out on Twitter earlier. So that's one level. And, I could actually show you what happened recently in AMD, just to kind of give you a sense, because these virgin point of controls, they'll often act as magnets, right? Price will return to where there is a lot of buyers and sellers. However, what you will see a lot of times is a fade once it gets taken out, right? So perfectly, you could see this AMD yesterday, right? Everybody was going nuts about the option activity. As soon as it hit as soon as it hit the VPOC, right? It took this is a place to take a target. And if you're very flexible in your trading, if you still like the name, you can of course add it back once it fades a little bit. That's $2 away that this thing came down, rather than just straight up holding, which is, again, you're still a winner. But if you took a target here and added back here, you're really juicing your returns a little bit. Right. And then the next place I would be looking to take a target in AMD is 86. So again, you go to this ON. Now, I don't know if this is going to play out the same exact way, but you could take a target here. If it pushes back, you can add back around 81.80 because it's still out of the range for the week, right? And then go from there. But of course, it could also move up here in a straight line. Right? It's not the only that's not the only possibility, right? And of course, it could fade and not come back, right? Oxy was a name that everybody was talking about this morning. Right? Look at what Oxy did. Right? So Oxy took out that, again, completely switching sectors. Sorry about that. But it just was a very good place to say, hey, if you're trading, if you've got short-term options on or something like that, I want to be a seller at 63. So this was a trade that I had on today. I sold right at that 63 and I was out. Oxy went actually a little bit higher. So I kind of said, hey, I'm out here at 63. It actually went up like another 50 cents or so, but I'm okay with that, right? Now, again, it's still holding trend here, so it might work out that it ends up going higher. But for short term, like that was a nice place to take off a trade because I was long options in Oxy. All right, going back to the other semis, I just went over ON, but really, a bunch of them looked pretty good. Another name that I was watching too, PI didn't really get off the ground too much, but this is a great illustration right now of like a good way to play this market, right? This is a market that chasing breakouts have been very, very difficult. Not to say that they don't happen, but more often we're seeing price action like this, in my opinion. Right, it starts to, it gets out of this range, right, and it kind of stalls once it breaks out. So again, the trajectory is still higher, and I think that you can play this game in names that the main thing to important here is that a name has to be in an uptrend for you to buy the dip and sell the rip, right? The main thing is the name has to be in a defined uptrend. If it's in a defined downtrend, then really what you want to be doing is, possibly doing the opposite, right? You want to be putting on your short when we rip, and then, covering some of that short when we make a new low, right? There's too much I see, of course, of the other way around. People trying to make money in names that are in downtrends. That's not for me. I'm a trend trader. Not to say that you can't make money going against the trend, but I stick to buying the dip in names that are in uptrends. And then, of course, like there's so many A's in the semiconductors, like names that companies that start with the letter A. ALCS has had a really nice recovery. Just like, that also got hit on the Tesla day. I'm going to go through the Tesla chart in just a second, but I would watch this 131.98, right? So it's testing those highs, and it's got that level to overcome, right? Notice that it had some difficulty with that today. ALGM is another one too, right? This has had a little bit of difficulty breaking out, right? These names have already had big runs, by the way, right? These names, I don't know if I would, be putting on a new trade here. I'm just kind of watching where there's the strength in this market, but it's been hanging out above value, right? So it's trying to basically take that next leg higher. But again, the move in some of these names has been pretty insane. One name that I have been talking about a lot recently, this is one of my favorite setups coming into this week, because it really just has been neatly digesting, right, above its value area on low volume, right, this SMCI. So this did a good job today, right? But again, right, it's really you still require in this market, I believe anyway, like you really have to finesse some of these, names, right? So, here's how I traded this name. I'll go over this list in just a second, but here's how I traded SMCI, right, the other day. Right, I took a target at 100. Right, I added this trade last week, right, and I took a target at 100. Right, it dipped a little bit. I added back the target. Right, again, not too far away, 97.90, but then I sold it again at I took that target off today at just shy of 100 today. Right, because I got the little bounce in the morning before Powell started testifying, and I'm happy to take a couple bucks, right, and put it in my pocket, right, and that's just one target. The next target I mentioned, all right, and this is where the value areas act as a roadmap for me. But I said, hey, we get to the top of value, I'm going to take another target. Right, that's at 103. Right, so again, following my trading plan, executing it, and as long as it stays basically above, so where's my bail point? Where am I going to see that this trade won't work if it breaks into the value area for the month, right? And that is, sorry, I don't know why I think our swim is jumping around like this, but it is for me today. 95, right around 95.70. Oops, so that's my so that is where I have set my stop. Right, so as long as it's trending in the right direction, I'm in it, and I'll continue to kind of add a little bit on weakness, right, and sell into strength, and then leave a piece on, right. So I've got a third of my trade on, looking for a breakout, right, and that's how I'm handling that one. 4 was a one, that I thought had really good earnings. I keep calling it Foursquare. It's Shift for Payments. So I keep doing it, maybe because 4 and Square, it's, it's in the same industry. But, this kind of came into, as we went over in yesterday's video, even though I didn't want to put on a big position, which I didn't, I just kind of put on a little bit of a position to test the waters. And, this market right now is about hitting base hits, with talking about, how bad the breadth is and what interest rates are doing. I feel more comfortable in this environment, just kind of going through the motions and making sure you get some wins like that. So where did I take this, the majority of this trade off today? Right at the top of value. Again, knowing where there's resistance, and you could see it's hung up there, right? So where did I take that target? Right, 71.30. Right. And then again, we'll play to see if, I kept a portion of the trade on, and we'll see if it can break out to new highs. Right. And if it can't, right, if it breaks 66, I'm out of the trade, or 660, 66.80. But I think I gave myself a little bit of room on that trade. What else? Energy names, not very good. We've seen a lot of call buying in some of these names, but they're not working. And it's a reminder that not all call activity works, right? I'm the only one who will say that, right? There's nobody else. Everybody who, puts out option flow and so forth, right? They jump up and down when it's like, it's like they've cured cancer, right? Oh my God, I saw calls and the name went up, right? But when a name goes down and it had option activity, there's silence, right? Nobody, it's like, there was never calls that happened in that name. So it's a name to watch. It did come into support because, again, this is just one day. It was down 2.6%. We also have been seeing call activity in Valero. They're just not acting well, right? And it's a reminder too, that if you do pay attention to option activity, I use option activity. It gives me some ideas. It gives me idea generation. Absolutely. But you have to still stick to your trading plan, right? The belief that every time you see option activity that they know something is a recipe for disaster, because about 50% of them work and about 50% of them don't work, right? You have to kind of plug them into your system and see how it goes from there. All right, guys, that's it for today's video. A couple other things that caught my eye. I mentioned I would go through our out of the box list. Again, these are names that are breaking out on multiple timeframes. So multiple time frame analysis. These are names that are breaking out on 3 different timeframes: the weekly chart, the daily chart, the 1 hour chart, right? And again, and they're also, we do put a limit into them in terms of, like, you won't see like the ALCS or the ALGM on here, because you're too on the weekly chart. So we just kind of keep looking at, like, names that are tighter, right? That are not super extended, right? So you've got Eaton on here. You've got Rockwell Automation, right? You got Carrier that's on here, Train Technologies, right? These are the names that have been continuing to kind of hold up pretty well, even though we did see a pretty big put activity in XLI, which kind of has me, speaking of option activity, maybe somebody's hedging, maybe somebody's speculating that, one of the strongest areas in the market might take a breather, but, we'll be watching that, right? But here's Eaton, which I think is one of the strongest industrials right now. Again, what's interesting about this? Well, when the rest of the market is acting sideways, even though this hasn't been blistering to the upside, right? It's still gone up from 160 to 177, right? It's slower, but it's moving in the right direction. A couple other names too. GFS made it to the list. CSIQ. We'll just kind of check this chart out. Maybe this will be the last one that we do here as we wait for Thinkorswim. Again, Thinkorswim giving me some troubles today. All right, so you got a little bit more tech on the list. It is above value. There's a VPOC up there at 44. Keep in mind, CSIQ is going to have earnings shortly on, 321. All right, guys, thanks for watching the video. Have a great night. See you tomorrow.